hello, and welcome to Entrepreneur Series with me, Elizabeth Bitao. Karibuni sana to all our returning subscribers. Thank you so much for your continued support. And if you're new to this channel, kindly go ahead and hit the subscribe button only after you've watched and you like the video. So today we are hosted by Elegant Executive Restaurant here at Adams, Applewoods. And thank you so much for hosting us. And today I'm presenting to you a guest who is going to talk on all matters finances. And let me give her the chance to introduce herself. Karibu sana.
Thank you, Liz. How are you?
I'm doing well, and you?
I'm very fine.
Leo na kunywa kahawa at Elegant Executive.
It's a bit cold, so to warm us up, please have some coffee.
Yes.
Yeah.
Okay, so who is Rina?
Rina is a financial trainer. I do financial and investment advisory. I run a company called Ascent Consulting. So we basically do financial planning for individuals, for businesses, and for families, and also do trainings on investments, principles of investments and finances.
Ah, great.
Yes.
So where does Rina come from? Did you always know you want to be a financial analyst? Take us through your story.
Okay. I've always loved numbers since primary school, clearly. It's like I knew my path, but I didn't know I would end up doing being a financial analyst anyway. But I've always loved numbers. I've done finance even in school, even in my master's. I'm still doing finance and numbers and all. So I just love it. I can literally live on matters of finance and numbers.
Wow. Yeah, I always follow your post, and you really harass me to come up with a portfolio. You will tell us yes, you will tell us more about that.
Yeah.
So Rina, you said you are the CEO.
Yeah.
Ascent Consulting. So you're not employed. Take us through your journey or starting your own practice. I mean, you could be somewhere in a bank as an investment.
Yeah. Okay. I've been employed before. It's not like I've not been employed before. I've been employed before. I've been in investment banking. I've been an accountant first of all as a profession. Then from there on, being an accountant for a while, I was like, I didn't feel fulfilled by doing just accounting behind the desk. I wanted to do more. I felt like I needed to do more. I wanted to know where are these numbers coming from. Where do these numbers go to? That is more deeper than just being an accountant, doing statements and all. And so I felt like I need to get out and do something else. And of course, I went and did another course in financial analysis and all. And so I got to understand being an accountant is different from being a financial analyst. Okay. And that is where I thought I actually found my interest to be in learning about investments and analyzing companies and analyzing investments and financial markets. That is where my basic interest is. So I'm glad I actually got out to learn more about it. So I've been employed before in investment banking, so I have a knowledge in it as well. And I'm also still in school learning about investments and all. Because I have to give people quality information and facts. In finance, you don't lie, you don't play with numbers.
And you don't
give facts.
Give assumptions.
No, you don't give assumptions. Of course, we do assumptions sometimes, but you have to give facts. You have to work with facts. So there's a lot of knowledge you have to gain as a person as well. So you have to keep on learning and learning from people, from my peers and all. So I'm glad I came into the investment world because I feel fulfilled, and that is how for me to come up with Ascent Consulting, I actually lost a job for a position that I really wanted and I could not get it, you see. But then it's a position in the investment world. I could not get that position, and I was like, I think I have information and things I want to do, but I'm not being allowed to do it. That's how I felt. And so I started just posting this stuff on my social media pages and all. Then I was being called on the side, like, tell us more about this, tell us more about. So even doing it as a business, was not an instant thing. I had to think through how do I go about it, and that is when I did my research more and what to do. And I thought maybe as people are asking about it, then maybe I can do a training about this stuff, and monetize it, you see.
Yeah.
And as I give people value out of it by getting to know more about investments, especially in the financial markets. It's a area that most people are either afraid or do not know, don't have the information. So that is where I got my niche. I got into it and I was like, I can do this as a business, and that is how Ascent got to be back.
Okay.
Yeah, it's certain training.
So how much did you use, or how much funding, or how much money did you use to start your consulting firm?
Okay. I can't say I started with nothing. That would be a lie. I started with something, of course.
Yeah.
And that something was, for me, it was my input, mostly in terms of my time and my resources and the knowledge. Because for me to start training people, I already had the knowledge that I had invested before in my education. So I didn't actually have to have an office to start training, because it started actually the year before COVID. That is in 2019. So I will do it online. So what I needed mostly just to post online and all my details, and I will do the trainings online. So that is how I started. So I would say this is maybe one of the lines that didn't require a lot of funding.
Yeah.
But right now, of course, I need a lot of funding because I'm growing and I need to do more than just online training. I need to create resources for the training that needs funding, of course, to create the videos and all, because mostly it's online. So I didn't start with much actually.
Okay.
Yeah.
So you started in 2019?
In 2019.
Okay. Yeah. So as we are talking about funding, and you are knowledgeable when it comes to finances, what are the various ways that people can fund their businesses?
Okay. Businesses are funded in different ways. We have two main ways of funding a business is through equity and debt. And debt means taking a loan either from your friend, from a bank, from a circle, from a venture capitalist. They do fund businesses as well. There's so many ways of funding businesses in terms of debt. So taking a debt as taking a loan for your business is not a bad thing. It's not something that should be discouraged. It's something that should be told, yes, it's okay to take a loan. But what you need to do is to do your valuation first of all. How viable is the business? Don't take a loan of something that you have no idea what you're going to do, what are the returns. You need to know the return on the investment, because the business is an investment. So you need to know how much return are you getting versus how much interest are you paying on the loan. You see? It has to make sense, because if then you're paying more interest and not even making a return out of the business, then probably not a viable business. So you need to be so accurate and do your research and understand, if I put the money in this, how am I going to be repaying the loan? Is it worthwhile? And so the other way of funding a business is through equity. As I said, this is not only for corporate companies, also is individuals and sole proprietorship. People go into equity. By equity I mean another person comes in, they get a share of the company. So that's the equity of the company. So you can own the company somehow. They may, depending on the variables that you discuss with your partner, it determines how much equity the other person will come in. So with equity, you have to get at least someone who has interest in your line of business at least, so that you both run the company in a good way. So those are the two main ways of actually funding your company to scale it up.
Okay. Yeah. I didn't hear you mention something like savings. Can you save towards starting a business, or
I
that
think
is not a way?
I mentioned the two because those are the main used in let me not say corporate, in a more, in a more professional way. We do equity and debt.
Okay.
But yes, most people start their businesses with their savings actually. Savings from your pocket money, from your job that you are doing. You do a little saving and you can start with a business with it actually. So yeah, so that's our way of funding a business.
At what point would you say that going down the investing in a business is not advisable. I think I read somewhere you talked about when you get your pension money, is that the time to go for business, or at what time is it more viable to go into business than another time? Because I believe there is a time you would go into business and it would be a bad investment.
That one also depends. There's no specific time for one to go into a business. The one I mentioned of going to a business with your pension money is because most people go into a business with pension money. You are retiring, maybe as a teacher. You're going to do agriculture for business. You're going to rear your chicken. You're going to do dairy farming, and you have no idea how it's done.
Yeah.
And you're using your pension money. Remember, this is probably the last money you are getting as an
You have
income.
between you and poverty.
Exactly. And you're going to use it into something that you have no idea about. It's not a bad thing, yes, but you are practically taking a risk with your last income.
Well,
you
yeah.
Which is maybe money that's supposed to be like your cash flow for the entire retirement period.
Sure.
So you need to be so sure of what you're doing. Probably start it before you retire, so that you know the challenges involved in doing such kind of a business. So there's no specific time of starting. You can start a business while you are employed, or you can get out of employment and start a business. It depends with what kind of a business you want to go into, how much research you've done for your business, the passion you have for the business, so that people can still do their business and still work.
Yeah.
And at some point, probably the business will give them more income than the employment, and they'll find solace more in the business than the employment. Then they'll opt out. And that people, business is not necessarily for everyone. The people who are employed, but they invest in businesses. Mm-hmm. They're in the business of investing in businesses. By that I mean, with the money that you've saved or whatever savings you have, you invest into someone's business as an equity or as a loan as well. Mm-hmm. So that way you're also investing into another business of your own passion as well, either a cloth line, makeup line, or whatever. So invest in it as well. So there's no specific time to say to start to get into a business. It is you as a person know when you're ready in terms of finances and all.
Yeah, so it is upon the individual to know the circumstances surrounding them starting that
at least
business.
Do enough research, then feel you're ready to go into it knowing what you're doing.
Okay. So what are the common mistakes that small businesses people make when it comes to money and investing?
The small businesses people not separating your business money and your personal money. That is the most biggest mistake I've seen almost everyone doing.
Okay.
I've done it before as well. Not separating your personal money from your business money. Mm-hmm. And so you find that most people are saying, I don't pay, and not paying themselves actually. I don't pay myself from my business, but my business enables me to pay my rent, I pay my food. But then if you do your math well, and if you allow yourself to pay yourself from the business, and do all your expenses out of what you're getting out of your pay, you'll find that you are using more money into your expenses, personal expenses, than you would when you pay yourself and arrange your personal finances from what you pay yourself. You see, so that is one mistake most people actually do, not separating those two. And another mistake I would say is not investing for your business. How you just take care of your personal finances is the same way you're supposed to take care of your business finances. See, because your business is a separate entity from you. So you need to have cover for it. You have to have a cushion for your business as well. So try to invest also for you. Have an account that has some investment, basically just for your business. Numbers tell the position of your business clearly, and by numbers I mean understanding the three basic statements of your business. That is the balance sheet, which tells the position of your business. Your income statement tells how much money you're making and how much money you're spending in terms of expenses and revenues and all. And the cash flow tells how much money is flowing in and out on a daily basis, on a weekly basis. So not taking into account and taking importance of understanding the numbers is also a mistake. Most people, even if you own a kiosk, it's good to know how much revenue you bring, because the revenue that comes in is not necessarily the profit, because there are expenses to be covered out of that revenue. So most people think I've made a turnover of 100k in this week, they think that's the profit they've made. You've not covered the expenses. So for you to understand that means you need to understand these basics of financial statements. What is revenue, and the most basic 5 answers. What is your revenue? What is your expenses? What are your liabilities? What are your assets? And what is your sales? Like, how much stock do you have? How much are you selling? So when you understand those 5, then you're able to at least understand how much money you're making. Is your business still viable? Are you just making losses? Or at least you're growing? So it's good to understand the numbers in your business as well.
Okay. There is this statement that I've seen people say, business is good in month 1, month 2 it is down, and month 3 it goes up, month 3 it's okay, and then another month nothing is making sense. And you find that some people tend to think that this is time to close their businesses. How can businesses be able to manage when it is peak time and when it's low, so that you don't find yourself not able to pay rent in the next month after you had a peak time? What would be your advice to such businesses?
First of all, those who say this month is up, next month is down, how are they gauging it? Are they gauging it by saying the working clients are not coming in? They made more sales.
They made more sales in month 1. Like, for example, people who are doing coffee right now and selling a lot of coffee because it's cold. But once the next week it's sunny, they're not selling any. So you find that their coffee is going to get spoiled, or probably they're not even going to do any business.
So the revenue is going down.
Yeah, the revenue is going down. Yes.
Yeah. Okay. One thing is that, like I said before, you need to invest for your business as well. Have a cushion for your business.
By cushion, you mean
having at least an account where, you know, if I'm not able to cover my expenses for the next month, I am not able to cover my employees, rent and delivery guy and all for the next 3 months. At least the way we say personal finance, you need to have an emergency fund that can cover for you for 3 or 6 months. I always advise for business people to also have such an account, so that when the time the business is down, at least you have that employee that you can't fire, you can't let him or her go. At least be able to pay him or her. You still be able to hold them. You still be able to pay your rent out of that account. Because big companies do that. Big corporate companies have been an accountant before. You have to have that account aside. You are going for holidays in December, there's no business, but you're supposed to come in January and pay rent and pay utilities and all. As an accountant, I used to sit down with my boss, and then we look at the numbers and say, this is the amount you have. We are going to pay our salaries in December, and we don't have any income coming in December. We need to pay our expenses in January. Do we have that amount right now in November? If we don't, that is probably in October. Do we have that amount now in October? No. What do we need to do in November? So that December and January, or maybe even February, is covered.
Yeah. So even small business people need to do a lot of planning.
Yes.
I know that in the month of January business is low, but December it was a boom. So you save or put aside something into your emergency fund, so that it cushions you when the things are not. That's brilliant. So there are people who are in businesses, but they are in a cycle of debts. You talked about debt financing, where you take a loan, then you're not able to pay that loan, or poor planning, you're not able to pay. So they find themselves, they have 3 apps, 4 apps, they're borrowing. How would you advise someone who is in such kind of a cycle? How can they get out of it and get their finances back on track?
Both as a business and as a person, right? Yeah. So first of all, as a business, because we're mostly talking about businesses. As a business, being in too much debt is also not good. It reflects on your books, on your balance sheets. It shows your liabilities are actually more than your assets, probably. So to balance that, you need to cut down on debt, and first of all, you need to accept there's that debt. And the next thing you do is, once you accept there's that debt, then how do you go about it? List down all the debts that you have. Then list down against the amount of interest each is gaining, either per month or per day or whatever it is, in terms of which loan did you take. So probably you can start paying the high interest loans, and have a budget for paying the loan. In your budget, create an amount that this is disbursement for a loan every month. You see, as a business, when the money comes in, there's amount just paying for loan. So decide, are you going to start with the high interest loans as you go down, as you scale down to paying the loans? or you can start with the small loans. You cover the loans and then you move to the other loans. You see, there are different approaches of how you can go about to pay a loan. But first of all, you need to purpose to actually do it, because if you don't decide to do it, then you continue taking up loans.
I love
to pay
that.
another
You
loan.
have to purpose. You be
Yes.
very intentional on
Be very
clearing the
intentional on
loans.
clearing the loans. And if you have loans from the bank or a circle, you can approach them and rearrange the loans. See, and there's a way even banks can take up all the loans, and you now have one loan to pay. You
Okay.
pay all the other loans, and they take up all the loans, and you only have now one loan to pay. So approach your lender, approach your creditor, talk to them and tell them your situation. They'll actually understand. Instead of you running away, they'll come for you. So just approach them, sit down with them and talk about how much you can be paying per month and how to rearrange the loans.
Okay.
Yeah, so be intentional about it. There's no shortcut about paying loans. Others will still be in it and close the business. Even as a person,
Yeah.
you have to be intentional about it.
Okay. So the same principles apply even when it comes to the individual.
Yes, they do. Finance is standard everywhere.
Okay.
Yeah.
Okay. So as we're talking about businesses and investments,
Yeah.
what are the ways that you would advise a business person? Probably your business is doing well and it is growing and you have some surplus. What are the ways that you would advise, a business person to go ahead and invest their money?
To invest for their business.
Yes.
You can buy assets for your business, such as land, just for your business, not for you as a person, because we say that business is a different entity from you as a person. You can buy another business that is either in the same line as your business or in a different line. You diversify
yes.
your businesses, especially in these difficult times. It's good to diversify your monies into other different kind of businesses, and know, as long as you know how you're gonna run them, so that if this especially when you do it in different industries, when this business goes down, at least this one is covering up. See,
Yeah.
so you
yeah.
diversify. You've seen big corporate companies having, like, until they call themselves so and so companies. You see,
Group of companies.
group of companies, group of schools.
Yeah, you're having group of companies.
You have group of companies clearly. So you are in motor industry, you can go into oil, you can go into automotive. You are doing that just in the same industry, but you're diversifying.
Yeah,
So it's good to diversify into another business. I've said diversifying into another business, buying assets, and also make sure you have I insist on that, you have an account for cushioning your business. That's also a small investment. As long as you put it into an account that at least gives you an interest,
Yeah.
you see, not just somewhere where money is lying. That's not investing. Money is being wasted, eaten by inflation. Or put it into an account that at least your business has an account that is growing somewhere. Those are the two main ones I can say you actually do into
Great.
other businesses and assets. Buy assets for your company. Clearly.
Okay.
Yeah.
Okay. Yeah. So you talked about investing in other businesses and investing in your business and buying assets.
Yeah.
And it got me thinking, there are people who get money and someone was saying money speaks to someone. If you don't speak to it, it will speak to you. Yes. So how do you know where to invest and what not to invest? Because we have seen people tell, do you have 10,000, come and you're going to give you 150%, you're going to get back your money 3 times. So what are those signs that you should look out for to know that this is not a place that you should put your money and where you can put your money in?
Okay, they say money can be a good servant or an evil master.
Master, yes, yes.
So you
Actually,
have
that is
to-
the thing. That is what I was
You
looking
have to
for.
actually, it's actually, first of all, investing into the knowledge of it.
Yeah, thank you.
That's the best first thing you need to do, because definitely you can't invest into something you don't know.
Yeah.
So that means you have to have a knowledge of something you want to invest in. So the signs of things that any investment that gives you a high return and the risk is no risk literally, or the risk is very low, it doesn't make sense. You see, because again, to explain high risk, high return in a layman's way is an investment is something that gives you a return, right?
Yeah.
And giving you a return, it means I have to work for it to come about. And you can't give me 100K right now I put it under this plate, and then I come and tell you your money has grown. Where has it grown?
You're going to give me, I will give you 100,000 and you're going to give me 250.
What has the money done under this plate? You see, yeah.
Yes.
High return.
Yes.
High risk.
High risk, yeah.
So, and high risk means you can literally lose all the money.
Yeah,
so
sure.
you be careful with it. So anything that is giving you high return and there's literally no risk, be so careful about it.
Mm-hmm.
Ask questions. How are you making these returns? What are you investing in that is giving you these returns, so that you have your share and you're giving me my share back still? Those questions, if they're not answered, then your antennas up. Then another thing that mostly those are pyramid schemes actually, is where you're told give us your money and you introduce someone else. This thing of introducing people, you're probably earning from the people you're introducing.
Yeah, sure.
Yeah, and at some point they would run out of that. That is how it goes down, because they're not investing, they're not growing the money clearly. They're just taking other people's money and giving you the money. So again, that is a sign of don't just rush into something because you are being told, come all of you, these are the returns we give you. Mm-hmm. And another thing is because it is being said by a celebrity or a famous person, or they
saw it on Entrepreneur Series, and now they think
Rina here said there's land you can invest in.
Yes.
No, do your own research.
Do your own due
research as well. Do your own due diligence, and understand that kind of an asset that is being said you need to buy. Does it lie with the objectives as a business? Is it long term? Is it short term? How are the returns? If it's short term, if the returns are short term, is this kind of an asset a long term kind of an asset? Then they don't tally. You see, you can't tell me I'm investing into land and by next month you're supposed to be giving me returns. It doesn't make sense. You see. So you have to understand this kind. That is why I say you go into knowledge and understand different kind of assets and how they work and how they give returns. That is how you understand if I'm actually putting money into something that is viable, or I'm being put into a pyramid scheme, or something that doesn't really exist. So do your own research as well.
Okay. Yeah. And I think you also need to look at when the deal is so good, like they tell you everything. There is no question mark. They even have a clear exit strategy. Have you ever seen those that tell if you are not comfortable, you can still get back your money, and you feel like, see, if I get there, and when you get there, unapata vitu kwa ground ni different. You get kwa ground and then unapata vitu ni very different. So thank you so much. I think as an entrepreneur now, you're enabling entrepreneurs to make informed decisions through the talks and the trainings that you're offering. Maybe now you can tell us more about these trainings. Where can people get you? What packages do you have for individuals, for business people? Because we want to make informed decisions, and investing in knowledge is actually the most important investment that one can make.
That's true. Yeah. Now we do training for individuals on personal finance, and that is training on investments, principles of investments. So we talk about, in those trainings, we talk about different kind of assets and how those kind of assets work, and how you can actually invest into those different kind of assets, not just in financial markets, also in real estate. We have these other upcoming types of investment, the cryptocurrency, the digital world and all. So we also talk about all that in our investments trainings. And then we also have training for business people. This is I call it business Biashara Smart. This is to enable people in businesses, especially the small business people, to be aware of how to manage their money in the business, and how to make to prepare their statements, how to read and understand their financial statements, not just to leave it for the accountant or their QuickBook bookkeeper to be doing it and you don't understand it. So that is basically for people in the businesses to understand their business in terms of numbers and know where it is, if it's a viable business or not. And another training, we also do training for kids. You can't talk very difficult stuff about investment for people. We're just introducing them into money management, and saving and investing is actually a culture. It's something that if you pick up at a young age, actually grow doing it and understanding it better, and so you become more equipped in even doing investment better.
So thank you so much, Linda. I'm sure our entrepreneurs who are following are much more empowered today. So what would be your parting shot to other entrepreneurs? You being an entrepreneur and a financial consultant, what would be your word to those entrepreneurs?
To entrepreneurs, I would urge them to learn more and get to understand your businesses more in terms of numbers. It's like the backbone of your business, literally. So you can do all your marketing, but at least get to understand also your business in terms of numbers. Get to understand what does it mean to have a balance sheet. How does a balance sheet balance? How is it read? How is it interpreted? And cash flow statement at least, and income statement. As a business person, strive to understand your business in terms of numbers. How much revenue does it comes in at least a weekly? How much how much profit do you make out of the revenue? What are your expenses? What are your fixed expenses? What are your variable expenses? So understand those small things, then you'll get ahead to understand how to actually run your business. And invest for your business.
Invest for your business.
I have to say that.
Yes.
Invest for your business.
Invest for your business. Thank you so much, Rina, for being our guest.
Thank you.
Guys, I know you're floating when you hear understand your books. So check out our next episode when we will be having a guest. We'll talk about what are these books that we are talking about. So that's it for today. Thank you so much for joining us. This is Entrepreneur Series, where we dream it, believe it, work it, and enjoy it. Thank you.
Thank you so much.